Precious metals is usually a bit of in a doldrum right now. But overall, I still think we're going to see gold at uh, was it 2650. I think we're going to see silver at 34, 35. It just might take a few more months to kind of get there, or it'll be later this year. But overall, still very bullish charts. They're making higher highs, higher lows, bullish chart patterns. So overall, it's still a very, very good. I think it's still one of the best kind of pockets to be in for the equities, or not the equities market, but an asset class right now.
Gold, a traditional haven, is currently navigating a period of consolidation. According to market trader Chris Vermeulen, this may involve a small pullback or a complex correction, known as an ABC pattern. During this phase, a brief dip could trigger a surge in trading volume as some investors exit. Despite these fluctuations, Vermeulen anticipates that gold will rally again, targeting around $2,650 over the coming months. On Thursday, gold prices rose slightly as global markets faced numerous risks. This increase is supported by long-term momentum in the market, which continues to influence investor decisions. Vermeulen highlights that gold typically peaks in late May, declines until September, and rises before a major stock market sell-off in October, becoming a defensive asset. This pattern is closely tied to the stock market's seasonal trends. Currently, gold prices are flirting with resistance near $2,400 an ounce. Analysts at Metals Focus, in their weekly note published Thursday, believe it's only a matter of time before the precious metal sets new all-time highs. They predict that the eventual monetary policy easing from the Federal Reserve will drive gold prices higher in the second half of the year. With a new record peak in sight, Metals Focus expects gold prices to average around $2,250 an ounce for the year, a 16% increase from last year's record average price. Vermeulen asserts that while gold has already started its ascent, minor pullbacks may occur. Commodities, particularly precious metals, are poised for substantial gains, as they tend to perform well during financial crises when investors seek physical assets. Join us as we delve into Chris Vermeulen's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
If we look at seasonality, gold naturally wants to top out just near the end of May, which it pretty much has done. And then it literally fades down and pulls back into September. And this is a perfect reason why you need to understand the money flows in the market, because if you understand the stock market is naturally going down, it pulls most assets down with it. And so we do see gold fade down during the same kind of time frame. And just before the stock market falls off a cliff and really sells off in October, that's when gold actually becomes a defensive play and bucks the trend and rallies ahead of that. But we've recently been long SILJ. We just closed out a position, locked in gains. And now we've got the markets, we're going to see precious metals most likely struggle a little bit. I don't think they're going to pull back hard by any means. If we actually look at the chart, I really think it's just going to be a consolidation. Like we saw gold have this first bull flag pattern. It had the second half and it hit its 100% measured move. So now it's just channeling through here. It might actually, pull back a little bit more and maybe break this low to create it's called a complex correction, an A, B, C. So a three-wave correction. And when it breaks this low, that's where people are going to say, well, if it breaks that low, I'm getting out. It's breaking down. But that's what the market loves to do. It loves to pierce that. We'll usually see a volume spike because everybody's stops get run. And then it'll spike down, usually intraday or for a day or two, and then it'll take off without all those players. So I think there's a little bit more weakness potentially. But overall, this is a very big pattern pointing to still 2650 for gold over the next several months. I still am very bullish on it. It's got a big bull flag pattern and it takes probably a few more weeks to digest and work itself out. I feel like this whole big rally in the stock market, for some reason, it has a feel and a look a lot like the tech bubble. And the tech bubble was back here, early 2000. And that was the last time we saw commodities, the most undervalued compared to equities. And here we are, like pretty much all-time lows. Commodities are the most undervalued they've ever been. And so this is setting up for, a massive rally when the momentum of all these trends shift direction. So I feel like we're going to eventually see gold's already started its way up, and I think it's just on the infancy stage. I think there will be a little bit of a pullback along the way. But overall, we're going to see the commodity space, I think, very well. This is kind of deceiving. It doesn't mean commodities are going to specifically rally huge. All it means is commodities and relative strength to more or less the equities market. Because if the equities market falls dramatically, this chart will shoot up, even if commodities don't rally.
Right.
Precious metals, I think, are going to be the sweet spot in terms of where a lot of money can be made. That's where they do very well, is coming out of a scenario, a financial crisis like this. People naturally want to go to physical asset. So what this is telling me is the stock market is primed for a very big correction. It'll probably pull precious metals down a little bit with it, but they won't fall as much. And that'll start to move this line up a bit. And then eventually we're going to see the precious metals space start to get traction. And eventually we'll see crude oil put in a bottom because investors will start to see, hey, most of this recession is coming to an end. And then we'll see those commodities take off. This line will shoot up and we'll see that space take off. So this is telling us there's going to be big weakness in equities. And eventually we're going to see a big rally in commodities.
Despite the current doldrums in precious metals, market trader Chris Vermeulen highlights bullish indicators in the charts, showing higher highs and higher lows. Vermeulen anticipates that gold could reach $2,650 and silver around $34 to $35 within a few months or later this year. Silver prices have recovered, reaching $30.60 during Thursday's Asian session. This resurgence is driven by strong buying interest, as improved U.S. labor market conditions fuel speculation that the Federal Reserve might start reducing interest rates by September. UBS strategists have revised their silver price forecasts, projecting the white metal to outperform gold soon. The Swiss investment bank now expects a year-end price target of $36 for silver and an average of $30.50 for 2024, marking increases of 20% and 14% from their previous forecasts. Vermeulen explains that the current pause and consolidation in gold and silver is a healthy correction. The ABC correction pattern in silver, which has caused slight panic selling, is viewed positively. This pattern is likely setting up for a move to $34 to $36, aligning with previous highs from 2012 and 2013. Let's get back to the interview.
It's having a series of measured moves. I love Fibonacci extension. I find it works very well for identifying tops and next upside targets. So long story short, if we do the first Fibonacci target, that is showing us that from this rally to this peak and this pullback, based on that momentum, it should rally up to hit this green line, which is the 100% measured move, which it did. And then it's had another correction. So then we can, once it tops out and pulls back, we can figure out where that next upside target is. And if we go from the same low, but to the new high and down to this low, carry it forward, you can see right now it is at this 618 level. And generally, if it pauses at the 618, we almost always see it go up to the 100% measured move. So this is simply just a pause, a consolidation. It is shaking things out. Just like I mentioned in gold, that kind of ABC correction, it has had a little bit of a pullback, a little bit of a bounce, and now it's starting to flush down and break this low. And I think we're seeing people start to panic out of silver. But to me, that's a good thing. We're really just seeing this flag down, and it's going to work itself out. And I do think we're going to go back up to see it at 34 or $36, which if we go back on the charts, we can see where that meets up with some previous price highs. Let me rescale.
Sure does. Back there in 2012 and 13.
Yeah, this brings us right back up into these highs. This high right over here, and then this high, which is about 35. So it definitely brings us into a major level where it's going to run out of steam just based on the chart pattern from Fibonacci, from momentum. And also there's going to be lots of overhead supply there where a lot of people got in here and now have been suffering for, a decade trying to get their money back. So they're going to hit the sell button when they get break even. That's the way it typically works. There's enough pain when they get to break even. They're like, you know what, I'm done with that. I'm getting out of it. And of course they get out of it, when it's starting something major and they miss out on the next big move. But that's just the way the average market participant, unfortunately, navigates the market. So I think there's more upside potential. As I mentioned, right now, precious metals is usually a bit of in a doldrum right now. But overall, I still think we're going to see gold at, 2650. I think we're going to see silver at 34, 35. It just might take a few more months to kind of get there, or it'll be later this year. But overall, still very bullish charts. They're making higher highs, higher lows, bullish chart patterns. So overall, it's still a very, very good. I think it's still one of the best kind of pockets to be in for the equities, or not the equities market, but an asset class right now.
Considering the current economic landscape and the Federal Reserve's potential interest rate adjustments, how do these factors influence the future prices of gold and silver? Are there specific global or domestic events you believe will significantly impact the precious metals market in the coming months? Share your insights and predictions in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.